Arjun, thank you very much for putting this on. I think it's a good thing that Capital on Stage turns the tables. I think it's healthy to make the venture capitalists get up once in a while and justify their existence in front of their customers, which are the entrepreneurs. So thank you for setting this up. It's a unique format. I like it. And basically, when you're working with entrepreneurs, as we do on a daily basis, and as you're thinking about working with new entrepreneurs, you're talking about a long-term relationship. And that is why venture capitalists tend to be picky. You've probably heard it from many others. In our case, we've been doing venture capital for about 14 years now. We've looked at over 12,000 business plans in that time, and we've done 33 investments, which reminds me of my favorite venture capitalist joke. What is the definition of a venture capitalist? It is a man with very deep pockets and very short arms. He has a hard time reaching down for his money. And yes, venture capitalists are picky people, but I think by the same token, the entrepreneur should be picky too. So when I thought about this speech this time, I said it would be nice to put myself back in the shoes of being an entrepreneur and ask myself, what are the critical questions I would like to ask and learn from the venture capitalists before entering into a long-term relationship with the venture guy. It's not just the venture guy asking the questions. And I think there are probably due diligence elements that each entrepreneur could incorporate into their due diligence process. I've kind of just, because we only have 5 minutes, picked out 3 that I thought might be interesting. One is to look at the team. The second is to ask about the customer and the satisfaction of the customer. And the third is, what is the business model? And is it a good business model or not? And so if you turn the tables on those 3 and you were kind of grilling me as the venture capitalist and say, well, tell me about your team. How is it? Who's on it? How long have they been together? What are their qualifications? I think I would look at a number of things. One is, you don't want to work with a venture capitalist with a team that's too uniform. If they're all investment bankers or they're all accountants, then it's probably not a good mix. Just like with your own teams, you want to have a good mix of talents that complement one another and that will be contributing to your company. And so I would ask the venture capitalists for detailed information on the background of their team. The second thing is, I'd like to know that there's somewhat of a balance in the incentive within that team. In other words, if I go with target partners, am I only getting one partner because he gets all the profits out of the deal if we're successful together, or are all the partners involved? In the case of target partners, I could answer, we're all equally involved in every deal. And so if you need the talents of my partner who used to work at Microsoft, my other partner who's been a venture capitalist for 30 years, or my third partner who's been an entrepreneur and built 3 companies, or in my case, a guy who built a software company over 12 years and took it public on NASDAQ and was the CEO of that company, you can get all of those talents and put them to use in your company at the moment you need it. I think that's an important element. You want to know that the team is stable. You want to know that they've been working together for a while and that the friction isn't there that might cause the team to explode and therefore unforeseen consequences occur. I think you would want to know that the team cares passionately about your business. That these are people who live entrepreneurship. It's good if they were entrepreneurs, some of them at least, so they can sympathize with all the stuff that you guys are going through right now and can hopefully relate to what you're going through and help you through the difficult patches that you're sure to be confronted with. The second element of the due diligence that might be of interest is the customer. When we do due diligence on our entrepreneurs, we always try to call up some customers and say, why did you decide to work with this company? What is it about their product that you like? Who else did you look at when you were considering buying this product or service? And since you've bought it, how has the reality lived up to the expectations that you had when you made the deal with the company? Those are the questions we ask. And I would encourage the entrepreneurs to ask the same questions by calling up the CEOs of companies that we've backed before, because those are our customers. Our customers, as I mentioned at the beginning, are the entrepreneurs. Call them up and say, you know, what did they tell you? How's it been? Have you run into any rough patches? Are they constructive or are they destructive? How is the working relationship? And I think that would be a critical part of your due diligence. I had a great experience at one point in my career. I went public on the NASDAQ. As I mentioned, and my investment banker at the time was Hambrecht and Quist. And Bill Hambrecht, who even in 1993, when I went public, was already a very experienced investment banker in the technology business, he would spend 1 hour with each CEO of a company that he was going to take public. And I said, Bill, I don't understand your business model. You're going to take 7% of this IPO, put it in your pocket, and you're telling me in the future that you're going to write research about my company and that you're going to trade my stock. And I said, but there's no contract and there's no guarantee that you won't just pocket the 7% and then, you know, go off and ride off into the distance. And he said, well, it works this way. Maybe in a year or 2 years, you're going to get a phone call. It's going to be from a CEO who's about to take his company public with Hambrecht and Quist. And he said, I want you to be able to say to him honestly, they told me they would trade my stock. They told me they would write research about my company, and they did. And it turned out I was the CEO for almost 6 years after the IPO. Every one of those years, Hambrecht and Quist wrote research about my company, and they traded my stock. And every once in a while, I'd get the phone call, you know, from the other prospective CEO, and I would say, they did it, you know. It was a handshake. He took the 7% up front, but he actually delivered on what he promised. And so on the subject of the customers, I really encourage you to call up people who've dealt with the venture capitalists that you're about to take money from and ask them, you know, how was it? A third area that I think is interesting is the business model. I don't know if I have too much time. How much do I have time? 1 minute to talk about the business model. I mean, I think it's important that whatever the business model is of the venture capitalists that you're thinking about getting involved in, and believe me, they are very different. You know, in our case, we're a early stage German-focused fund. We've done 33 deals. 31 of them were in Germany. Virtually all of them were early stage deals. We've been doing it for 14 years. And our business model is quite simple. We're a financial investor, we're a long-term investor, and we make money by buying low and selling high. You know, it's quite a simple business model. And so if you take us on board, you have basically a pecuniarily interested investor who wants to make a bunch of money. I mean, I contrast that with those of you who might be looking at corporate investors as potential investors who may be right up front about what their interests are, which is, hey guys, if it really goes good, we've got a window on technology and into your area, and if you develop a great company, we'll want to buy you at some point maybe down the road. You know, that's an honest approach. It's a very different business model, but I think you need to look at the business model of the venture capitalists that you're talking to and understand if it fits what your own ambitions are, if it fits from the length of time that you want them involved, if it fits with what their incentives are, and if it fits with your own goals and the goals of the other members of your team. And so these are just 3 examples. Tried to turn the tables a little bit today, talk about the team, the business model, and talk about the customers. And if you do your due diligence, I'm sure you'll come up with the right answer to which venture capital firm you want to work with. By the way, we didn't explore another issue, which I think is fascinating. Maybe I'll be able to explore this in one of the next ones of these sessions is, do we need venture capitalists at all? You know, I mean, it's almost a philosophical question.
Okay, thanks so much, Kurt. Thank you.